you're trading but still guessing what a PIP is or how to calculate it, you're not trading, you're gambling. And in the next few minutes, I'm going to make PIP so clear, even your grandma will trade forex confidently. Stick around, this might be the most important video you watch today. Hey friends, welcome back to the channel. It's Leverage, and today we are breaking down one of the most important things every forex trader must know: how to calculate PIPs like a pro, manually and with TradingView. What is a PIP? PIP stands for percentage in points. In some other textbook, you can see it as points in percentage. It doesn't matter. A PIP is the smallest standard price movement by which the value of a currency pair can change. Now, the values you're seeing on your screen right now is basically an assumption. So let's assume the values you're seeing on your screen is the current market price of a particular currency pair. So the PIP count starts from the fourth digit. The one you see on red is basically where the PIP count starts from. In most currency pairs, one PIP is equal 0.0001. But for pairs involving Japanese yen like USD JPY, one PIP is equal 0.01. What is a pipette? A pipette is 1/10 of a PIP, providing more precise pricing, and it is used by brokers with 5-digit codes. So, the values you're seeing on your screen now, the fifth value after the decimal point is your pipette. One simple thing for you to always remember and understand is that 10 pipettes equal 1 PIP. So this value you're seeing on your screen at the fifth position after the decimal point has to increase up to 10 before it turns to 1 PIP, and then you can add 1 to the preceding value, which makes it 5, and then the initial value at the fifth position becomes 0. So that's it for that. Manual calculation for non-JPY pairs. So before we go into this particular aspect, for those of you that hate math in school, I'm sorry to break this to you, it's going to haunt you again. Yo. I'm actually kidding. So even if you don't understand how math works at all, it's something you're going to be able to handle. And if it's stressing you out too much, just punch the values into your calculator and you're good. So say you're trading Euro USD and the price moves from 1.1000 to 1.1025. Well, to calculate the PIP difference manually, just subtract those values from each other. So 1.1025 minus 1.1000 equals 0.0025. So you already know that if you're dealing with pairs that is not involving the JPY, that means the Japanese yen as the base or the code, then the PIP count will start from the fourth digit. So let's proceed. 0.0025 divided by 0.0001 equal 25 pips. Boom, you just made a 25 pips move. Manual calculation for JPY pairs. Now let's say you're trading USD JPY and the price goes from 110.00 to 110.50. You do the same thing. 110.50 minus 110.00 equals 0.50. Since one PIP is 0.01 in JPY pairs, if you remember vividly, I explained that for non-JPY pairs, the PIP count starts from the fourth digit, which simply means you will start the counting of your PIP from the fourth digit after the decimal point. But for the cases of JPY pairs, you start your PIP count from the second digit after the decimal point. Now let's continue. 0.50 divided by 0.01 equal 50 pips. So that's a 50 pip move. Easy. Alright, let's make it even simpler using TradingView. Go to your chart, select the ruler tool, click and drag from your entry to your exit point. You see a box pop up, and that is your PIP right there. So there's another way you can calculate your PIPs using the position tool. Let's say you're trying to buy, for example. You want to use your long position tool, right? The value beside the percentage you're seeing right here, because you see one value here in percentage. The value to the right of that percentage value is your PIP. Practical recap. So just to recap, for most pairs, one PIP equal 0.0001. That's for non-JPY pairs actually. For JPY pairs, one PIP equal 0.01. Now this is the manual formula. New price minus old price divided by the PIP value. Now on TradingView, just use the ruler tool or the position tool to measure the move. If that just makes sense to you, imagine what the rest of this channel will do for your trading journey. Hit that subscribe button right now, not just to support the channel, but to support yourself. Don't trade in confusion again. Stay leveraged.